Can we make it so that they can bypass the lobby? You're talking on mute.
Yes, I'm going to try to bypass that right now.
We'll wait another few minutes for more people to join, then we'll get started. Looks like we got a few messages there. You see those, Ashley? Yeah. We'll give it one more minute, then we'll get started. Okay, I'd say let's go ahead and get started. What do you say? All right. Well, good morning, everybody. Thank you for attending and welcome. My name is David Reiner, and I'm part of the business development team here at Omotayo CPA. I also want to thank Ashley Bartlett for organizing today's webinar and helping bring this group together. We know that running a trade or career school in Texas requires more than delivering quality education. It requires strong financial oversight, disciplined record keeping, and a clear understanding of what the Texas Workforce Commission expects from a compliance standpoint. For many schools, the challenge isn't intent, it's clarity. Understanding when an audit is required, how financial statements should be structured, what triggers regulatory scrutiny, and how to build systems that prevent last-minute scrambling. That's where proactive strategy becomes critical. Today's session is designed to give you practical insight into TWC financial compliance, not just the rules, but how to think about compliance as an operational advantage. When your financial systems are structured correctly, renewal becomes smoother, audits become less disruptive, and leadership can focus on growth instead of reacting to issues. You'll hear from Tosin Omatayo and Igo Akpabor, who have deep experience guiding institutions through audits, renewals, internal control design, and long-term financial strategy. Our goal is to provide clarity today and to be a resource to you well beyond this webinar. If questions come up during or after the session, we encourage you to reach out. We're always happy to have a conversation about your specific situation and how to strengthen your compliance framework. With that, I'll turn it over to Tosin.
Thank you very much, David. How's everybody doing? First things first, I want to apologize for the technical issues we had with the last link. I think I clicked the wrong button in there and it kind of messed the whole thing up. So I apologize, and I thank you all for being very understanding and shifting to this new link. Okay. We had a few things set up in the old link, but I will do my best to see if we can kind of recreate it as we go. If not, just bear with us. Okay. So today I'm going to start off, by introducing myself and the rest of the team here and just telling you guys a little bit about us and why, what lends credibility to us to be able to have such a webinar. Okay. So here we go. My name is Tosin Omatayo. I'm the managing partner of Omotayo CPA. I've been doing accounting, payroll audits, all that good stuff for over 20 years now. Started way back in college as an intern for a CPA firm and kind of stayed in the industry ever since. And over the course of time, I went from doing it, working for a CPA firm to having my own CPA firm. And we've been able to grow our CPA firm to a mid-sized CPA firm through the grace of God and through wonderful team members that we have on staff. Our CPA firm focuses on a few different things. We do fractional CFO services. We do audits, reviews, and compilations, which we call assurance services. We also do taxes, payroll, pretty much name it. We are a diverse firm that has a great team with diverse experiences. And really, we position ourselves to be able to support the entrepreneur, support the business owner in accomplishing whatever their goals are. We also do that in referring or connecting our clients to different folks and different businesses, different resources within our ecosystem, just because we've got a wide-ranging set of clients with different industry experiences, with different industry, connections. And generally, when someone is trying to, accomplish something, there's somebody out there that we may be able to connect them with. Okay. Also, we have my partner on the line. His name is Ige Akpaibo. He's going to be our audit partner, and he's in charge of all the different audits that we have in the firm. So he's the expert when it comes to all the technical auditing stuff, and I kind of let him do his thing and just sit in the back and focus more on the fractional CFO side, making sure the accounting, the business structure is properly set so that when an auditor comes in, you're not just paying for somebody to tell you that your financials aren't good. All right, you need to make sure that they're well structured before you call the auditor, because they are not allowed to make any changes, right? They just have to audit what's there so that they can give that third party that's requesting for these audited financials kind of a thumbs up, or they have to vouch for your financials. So there's a whole laundry list of things that they go through, which many of you may be already experienced with that. Okay. So that's the short and sweet about everyone on our team. And then obviously, you guys have all met David and Ashley, who are wonderful folks within our business development team. We're trying to make sure that we're not, one of these best kept secrets out there. Our firm needs to be, we need to step out a little bit more out of our shell, unlike many CPA firms and CPAs. We just like to stay behind our screens and just do our work, put our heads down, and just keep going, right? But we definitely want to make sure that people know who we are, what we do, and the value that we can provide by partnering up with all of the different schools, businesses, industries that are out there. Okay. So we've got a website and you guys can check us out there. Enough about us. Okay. Now let's get into the meat of why everybody came in here. Okay. So we had some polls set up in the last meeting. So I'll just kind of hopefully just ask you guys some questions. And I want this to be a little bit interactive, right? I'll be asking you guys a few questions and just have people just post it in the chat. I've got the chat. I've got my 3 screens up here. Yes, like I said, we're CPAs. We got all kinds of screens here. So I've got my chat up on one side. I've got the presentation up on one side. So just feel free. Go ahead, and if I ask any questions, you can reply in the chat. If you have any questions, all right, go ahead. You can also put that in the chat or use that Q&A feature there. Either or, we'll have Ashley kind of look at that those 2 boards and make sure that we address anyone's questions or concerns or issues as we go through the presentation. Now, I usually like having a Q&A session at the end of the session, but I know sometimes when we're doing some of these technical things and we're talking about, different aspects of business and so on, there may be questions that pop up right then and there, and I like to address those because sometimes if you move 10 minutes down the line into something else, one, you might either forget your question, 2, you might lose the context of the answer that I'll be giving, right? So please make sure if you do have any questions, feel free to throw it in. Okay, so before we get started, I'm going to start off with my first question here. And my first question says, how many of you in the webinar are currently going through audits? You can just reply with a me or yes or a thumbs up or something, just to let us know how many people are undergoing audits currently. All right, diving into it. We're going to start off with licensing and ongoing compliance required by the TWC, right? Most of you, if you are already a TWC school, TWC approved school, you already know all this because you've gone through it. You went through all the piles of documentation that you needed to provide to TWC to be able to get your certificate of approval and so on. But if you're not, if you're one of these schools that are just kind of exploring what is needed to be able to, get that license so that you can actually have a school that's approved at the TWC level, well, there are different things that they will require. All right. And everything is going to be on that TWC board. Now, I don't have a lot of time to go in detail about everything, so I might just be talking generally about some of them. But there is a TWC career school page on the TWC website. Please go through that. They have all of the information. And one thing I've actually also found, many of you might testify to this, is they're pretty helpful, right? They'll go through and you can call them, ask any questions that you have as you're getting all of your documents in a row. Okay. Now, one thing I would say that's kind of outside of that is that you technically don't need to be a registered business to be able to be a school, right? You can be an unregistered business, sole proprietorship type of stuff to have a school. But I would actually recommend that if you're, or at least one of my rules, whenever I'm talking, consulting with different folks, is that if you're going to be serious about business, and let's consider the School of Business, even if it may be a nonprofit, it may be for profit, that's fine, but it's still a business activity, right? So if you're serious about whatever business activity that you're going to go into, well, I always highly recommend that you do register a business structure for that business. Now, when I say register a business structure, I'm not talking about going down to the county clerk office and registering for what most people call a DBA, right? That's the sole proprietorship that I was talking about. I would recommend let's start off with a little higher level that requires filing with the state. Okay, Texas Secretary of State, if most of you guys are in Texas. If you're not, it's going to be with your Secretary of State office. So there you can register 3 types of companies generally, right? Partnerships, which have a lot of different flavors to them. You got the general partnership, the limited partnership, limited liability partnership, and possibly more, okay, within your state. But let's just group that into partnerships, all right? So that make our number 3 pretty easy. Next is going to be the LLC. And then the third is going to be a corporation, or what we call a C corporation. So it is my recommendation that if you're going to go into this now, as you most of you have figured out, there's quite a bit of budget that's required to even become a school, right? There are all kinds of different costs up front. Okay, so registering a business should just be part of that overall cost of starting your school. Okay. Perfect. So then after you've registered your school, obviously, after you registered the business aspect, right? Then what I go into is going to be financial compliance. And the next steps after I say, hey, if you're serious about business, register a business, right? The next step is going to be make sure you do open up a business account and a business credit card for most people. Now, if you are, if there's some issues in managing credit cards and so on and so forth, it's not a requirement, but I generally recommend business credit cards because of a couple of things. One, business credit cards, a real business credit card doesn't show up on your personal credit history. Also, it could be a quicker way for you to be able to make some expenditures, right? Because if you're just starting up something new, right, you may have to transfer from another bank account, which could be your personal account, into the business account before you spend, right? So you don't want that. Sometimes you don't want that friction to be there when you're trying to set things up for your business and your school. So therefore, a credit card might help you kind of do those a little bit faster. Once those 2 things are set up, or just the business account, my next rule is that all spending, I'm talking all spending. We have many clients, right? So one thing all new clients understand is going to be the structure that we require entrepreneurs and business owners to fall within. Now, we require this because many of our entrepreneurs, or many entrepreneurs like us even, we wear many hats. We're the person answering the phone, we're the janitor, we're the person, taking care of customer service, we're the ones running payroll, we do so many things. And therefore, before we can even talk about financial compliance, we need to make sure we are talking about financial structure. And that financial structure is all based on how you record or how you capture the inflows and how you also record the outflows. If everything is everywhere, it's going to be another thing that you have to manage or that you have to think about on top of all of the different hats that you wear. So that's why we highly recommend or require that all transactions for your school, for your business, must go through those accounts, through those business accounts, through those business credit card accounts. Okay, which in turn is going to get to my next layer. If you notice, the way I speak a lot of times are quite layered because you can't do something that I'm talking about right now without having completed some of the other things. Example, you can't you can't you can't spend from your business account without registering a business account. You can't register a business account without registering a business, right? A bank is not just going to give you a business account. They're going to ask you, hey, where are your formation documents? Where is your EIN, also known as the tax ID for your business, or also known as employer identification number? Okay, so all of those are layered. So now we get into that part after you are spending everything through your accounts, then we can now come to financial compliance. Whenever we're submitting, so any questions so far before I go on to the next thing? I'm trying to be mindful of time and also leave a little bit of time for some Q&A at the end. So it might feel like I'm just running through it, but I do want to slow down at a few different periods to make sure that everybody is on the same page and we're moving together. Perfect. All right, so the financial compliance expectations that the TWC has is, number one, you got to submit your audit report on time. Okay, that's probably like the easiest one. They give you about 6 months to get this done. June 30th is the deadline. I always tell all of our clients, hey, if you have done all of those different things that I required properly, generally we should be your accounting team, whether internally or externally, should be able to complete your accounting, your financials, let's say around February / beginning of March or March, first 2 to 3 months of the year, right? Because one, they can't close it out until December is done, right? So January is like when they really start, reconciling the final numbers and making sure everything is in the books, it's accurate and it's complete, right? So if they're doing all of January, I'm going to give them a little bit of slack, saying that it's going to take about 2 to 3 months to truly close out the books. Well, that's 3 months in. Once you're done with your financials, you can now call the auditors. You don't have to wait. Make sure everything is timed properly so that it's not another stressor. It's not another thing that you have to think about as we're juggling all of these different things that we entrepreneurs have to do, right? So technically, most audits or a lot of our audits will take anywhere from let's say 2 weeks to 2 months. 2 weeks to 2 months. So now let's say you finish sometime in March, 2 weeks to 2 months gets you down to May, right? We're pushing up to the deadline. Don't come to an auditor in June and tell them that, hey, I need this done in 30 days. I need it done in 10 days. That is unrealistic, right? We need to make sure we've got the proper structures so that our lives are made easier. Now, a lot of these things that I'm talking about, and I'll share my slide deck with everyone afterwards, by the way. A lot of these things that we're talking about is going to try and make some of the things that you do kind of almost mindless / automated, so that it's not another stressor on top of everything you've got to do. Remember, we're the entrepreneurs of these schools, right? We're the directors, we're the leaders, we're almost everything to these schools, right? So there are other things that are expected from us, which we're going to be talking about, right? Beyond just the financial compliance side. So we need to make sure that that's done. If you have good accounting, what you'll have when everything is done within your accounting, this is before the auditors come in, is, or let me put it this way, if you're using good accounting software and you do good accounting work within that software, well, you'll be able to pull up some of these financial documents that will be used to create the financial statements that will be submitted to TWC. One is going to be the balance sheet. The balance sheet is going to be the financial statement that shows your assets, liabilities, and equity. Again, that's assets, liabilities, equity. I'm going to break it down simply. Oh, by the way, one thing I always tell new clients that come in is that I'm not just a CPA, I'm also an entrepreneur. Me and my family, we've been blessed to have multiple businesses that we run and manage. So I always throw that in there because it does give me a different perspective, meaning that I get to sit on the same side as an entrepreneur and understand some of the challenges of running a business, right? And then I also get to sit on the side of a CPA and seeing how can I relate some of these things so that the entrepreneur doesn't feel overwhelmed with all this information that they've got to run, that they've got to know on top of running the business. Okay. Let me show you guys an example of this. So on the balance sheet, right, I said assets, liabilities, equity. Most CPAs will just move on from there. But for me, an asset is something you own. A liability is something you owe. And equity is just the difference. Think of it like equity in your house, right? You take the value of the house minus the loan or the mortgage on the house equals your equity. That's your real value that's kept. Okay. Moving on, we've got the income statement, or what some people call the profit and loss, right? That's what shows the income or revenues or sales that you've generated for that time period. All these financial statement audits will be for the year. Okay. Can you have fiscal years? Yes, you can have fiscal years. And a fiscal year just means it's not from January to December, 12 months, right? It might be school calendar years. So let's call it August to July, right? It's still 12 months, but it's not starting from January through July. January through December. Okay, so income statement is going to be what shows your income and all of the different expenses that you've had in that same period to calculate the net, which if it's positive, we call it a net profit. If it's in negative, we call it a net loss. Next, you're going to have the statement of cash flows. And this one is kind of a weird statement. Most people don't even care about it, don't even look at it. But I always find it quite valuable because it tells you, or it shows you how cash moved through your business through that period. And if that period is for the year, it's for that year. And when I say how cash moved, because I get a lot of these questions, hey, you say I'm profitable, but I don't have any cash at the end of the year. What's going on? Well, the statement of cash flow is what you can use to see that, because here we go. Just breaking that really quickly. Let me see how I'm doing on time. Yeah. All right. So breaking down the cash flow statement really quickly, it starts off with the net income or net loss or net profit, right? Then it breaks out all the non-cash uses that you might have on your profit and loss. An example could be depreciation, which depreciation is how you expense an asset that you bought, let's say like a house or a car or a building or equipment, right? You are expensing that or kind of splitting off the cost of that asset over a certain time period. Well, you've already paid for it up front, but let's say like a car, we depreciate a car over 5 years, right? You paid for it on year one, but we're not writing off or deducting the whole cost of the car in year one. We're actually going to take it over 5 years. So let's say it's a car that's worth $10,000, right? So year one on your books, you're going to have a $2,000 expense on your profit and loss. Well, the cash was already spent. but $2,000 is deducted this year. So on your cash flow statement, that's what we call a non-cash expense. So it's going to be added back to your cash flow. However, that $10,000, because we're still in year one, is going to go in another section where we look at all of the cash that was posted to your balance sheet. Remember, we've got balance sheet, income statement, statement of cash flows. All right. Everything I always say is layered. So I try not to get too technical down without introducing that idea previously. So if you have any questions, you can always drop that in there. So next section is, like I mentioned, is going to be any cash that was used but recorded on your balance sheet. As an example, like I just gave, that car. Well, yes, there was that $2,000 depreciation that I had to add back on my statement of cash flow, but then there's a $10,000 negative that I spent because I bought the car. This is all in year one. Okay. Maybe you might have some loans, right? Well, remember, whenever you're paying off loans, only the interest portion goes on the profit and loss. The principal payment goes on your balance sheet. So it's going to be in two different places on your statement of cash flows, and so on and so forth. And that's how you would know, where did all this cash go in your business. So that's one quick breakdown of the statement of cash flow. I do this a little bit longer, but we don't have too much time on that statement of cash flows. And then gross tuition and fees, it's kind of, just a report showing the tuition and fees that you've collected as a school. Okay. Now, for smaller schools that are out there, just a quick note, and that means if you're grossing, that means the money you've taken in for tuition, right, or fees and so on, is less than $100,000. You can just do, like a self-certification type of process. Okay. Now, whenever we have our accounting completed and the accounting software has helped us to create those different financial statements, or it's built in, right? You just go to the report section on most accounting systems and they'll be there. And they're always updated as you add more data, right? You've got there's now that requirement for an audit. Every single year, this is a requirement. You have to make sure to budget for all of the different costs within your business without forgetting some of the ancillary costs of having that type of business. That's something we generally face, is that everybody's always budgeting for payroll, for rents, for this and that. And then when it comes to the audit, which is required because of your license, it's always an afterthought, right? So we have to make sure that it's not an afterthought. It's part of our operation. It's part of our structure that we have for our business, so that it's not something that creates stress when we get there. Okay. An audit is going to be the highest level of assurance a CPA can provide, or a CPA firm can provide, on financial statements. Now, there is a requirement for any CPA firm that is doing audits, reviews, or compilation. They also have to be registered with the state board and approved to do audits, reviews, and compilations. And also, the work that they do, those audits that they do, get reviewed by the board in a program called peer review. Okay. So you'll generally find that the audit is probably one of the most expensive types of assurance services. Reviews are next, and compilations are last. And it's because it's based on the level of assurance that we're providing. Okay. So audits are going to be, we're going to have to do a little bit of probing. Actually, sorry, not a little bit, a lot of probing, meaning that we're going to be looking at the details behind the numbers. So if we're looking at, let's say, your supplies expense, we might take a sample of all of those transactions that made up the total supplies expense and say, hey, where's the receipt for this? Where's the receipt for that? We want to see itemized receipts, right? We don't just want to see your bank statement, right? You can go to Walmart and buy, school supplies, right? Or you can go to Walmart and also buy what would I call it? Let's call it milk. Not milk. Milk is too easy. Let's say you can buy food stuff, let's say, that's for the house. And you can also buy school supplies that's for the school in Walmart. However, if you were just to provide a credit card statement or bank statement to the auditor, they don't know what you went what you did with it, right? So that's why we're always looking for the itemized receipt to be able to justify the business nature of that expense. And that's kind of how audits go. We're trying to have a third party come in, look at the financials, and say that, okay, based on all the sampling, all the testing that we've done, we feel confident that these financial statements are, and here's the technical word, free of material misstatements. We never say that they're perfect. All right. That's insurance companies and stuff like that have told us not to. All right. So that's the general saying. It's going to be free of material misstatements, which just means that based on our testing, we don't think that there's anything majorly wrong or majorly off that will change the numbers, change the totals that you see on these financial statements. And we have to back it up. Okay. So that's why you'll generally see assurance services are kind of like separate services that most CPA firms will provide, or actually some, not all do, but some will provide. And it's like its own beast on the side. Next up, we've got lower tiers. Not too many of you guys will fall into this, will be allowed to provide this, but maybe some will. So I'll still talk about that. That's the review and the compilation. A review, we do a little bit of testing and just kind of make sure the accounting is done well. And then compilation, we do a little bit of testing or less, testing. And then we still make sure that the accounting is done well. Okay, so those are the three different levels of assurance services. Any questions so far? Awesome. So, do you need an audit or not? Well, all schools need an audit, really. Right. If you're grossing more than $100,000, like we said previously, you are going to require an annual audit. If you are a new school, if you are not yet licensed, right, and you want to get licensed, you will need an audit. Now, I've been trying to fight a little bit with TWC, but I haven't been successful at all. But in one of their documents, it does say, and I might have to find that for you guys. It does say new schools can provide like a compilation, but they never honor it. Okay, so if there's anyone here that has a lobbyist or is close with the state senator or something like that can help us make sure that they are held accountable to that, hey, I'll send you the information, I'll send you the line item. All right, and just say, hey, they're not honoring this for new schools. They're forcing all new schools to still do an audit, which is an entry to it's an entry barrier, I believe, right? Because a lot of audits are going to cost you a little bit of money, right, or a lot of money. So therefore, it's kind of like an entry barrier towards being able to start your business. Whether it's, again, we've talked about, I still look at it as a business activity, if it's even if it's a nonprofit or a for-profit entity. Okay. Now, let's talk about a few red flags, and then I will probably speed it up a little bit faster from here. Okay, red flags. All right. Now, when you submit these financials, like they'll do stuff with it. I mean, they'll probably do some statistical analysis, kind of look at the numbers, make sure things are good. One thing they do look at is going to be the equity. Is it positive? Is it negative? Right. They're also going to be looking at things like, hey, because they don't only just do a financial compliance, they also do operational compliance, which we're not talking too much about, but many of you have had that experience where TWC is asking you for information about, your students, the registration, counts, the hours that they're putting in, and so on and so forth, right? There's some operational side issues that you may have there, but here we're just pretty much looking at the financial red flags, right? Also, last one that I wanted to touch on is going to be unearned tuition. Unearned tuition is tuition that's paid in advance. It could mean it's tuition that's paid for a program that lapses between your reporting period. And the reporting period that I'm now talking about is, let's say, like the end of the year. Let's say you're a calendar year based business, right? Well, if you have a program that starts fall and ends in spring, but the students pay for it all up front, well, you're going to have, let's call it 50% unearned. This is just quick math, all right? You have to be a little bit more technical about it, but just for purposes of this webinar, it's just, hey, if they paid for it all up front, well, you can only recognize 50% of it as real revenue. And then the remaining 50% of that tuition that they paid up front as unearned tuition. And then when you cross years and they finish up, that tuition now becomes earned at that point when they do finish. Okay, so that's kind of like an explainer on what unearned tuition is all about. Just in case some of you guys have received those letters from TWC saying, hey, we're missing your unearned tuition statement, and you just fill it out and send it back. Okay. So we've touched on these a little bit as I was going through this, but some of the things on why schools like struggle with this is mainly because it's an afterthought. Okay, everything about this type of financial compliance, and I'll also include operational compliance, right? Even though we didn't talk too much about it, is all a last minute thought. You're just pretty much focused, and like I said, it's understandable. As we entrepreneurs, we have a lot of different responsibilities within the business, right? But we're so focused on making sure we're getting students in the door, making sure we are educating the students properly in whatever program that they're going through. We're making sure that they finish on time, and so on. The teachers are showing up, and all these different things that you've got to manage and make sure is running, that this side, which is going to be that compliance side of the business, kind of is like, I'll deal with it later. Our paperwork isn't clean. We'll clean it up at the end of the year. Our accounting isn't clean. Yeah, we'll get the bookkeeper or the CPA firm to come in and do it at the end. Like, it's always going to be an afterthought. And that is usually what's going to create a lot of stress, and why a lot of schools find it hard, to get the audits done, to even find an auditor, because not all CPAs can do audits again, right? So we need to make sure that we're implementing the structures that a few of the structures that I've talked about up front, to make sure that it's not something that's an afterthought, but it's something that continually runs because of the way we've set up our businesses. Okay. So, all right. And I'm looking at my time here, and I don't have too much time. So I think actually I'm going to cut it off right here. I'll leave on the screen a few steps that I recommend on how to make sure people kind of stay organized. But let's open it up for some Q&A here.
But I do see Audrey has a question in the chat there, Tosin.
All right. Hold on 1 second. Yeah, got it. So it says, do the audited financials need to footnote or separately the TWC gross revenue, or just communication of that total to TWC when calculating renewal fee? I know. Oh, separately state. I know the prepaid unearned tuition has to be shown in the audited footnotes. That's correct, but wasn't sure about gross revenue. No, pretty much if you had any other type of revenue, the auditor should break it out, right? So you should have a line for tuition and fees, and then let's say what might be out there. Let's say you are a truck driving school renting out your trucks. This is just a weird example. Well, the rental of the trucks is not part of tuition and fees. It should be a separate revenue line item. So therefore, TWC will be able to pick that up on their own. Okay, we haven't seen it where they required it to be separately stated. However, Ige, do you have any thoughts on that one, just in case?
No, you are absolutely correct. You just break it down on your financials, on your P&L or income statement, and that's what you need to do.
Perfect. Perfect. Thank you. I'm scrolling up on the chat here. I do see one more question here. Quick question. Does your firm provide CPA services only, or do you handle audits? If not, do you prepare everything to ensure a smooth process for the auditor? Now, generally, a CPA firm cannot handle both your accounting and audit, generally. However, because we have multiple partners, we've been approved to have one partner deal with the accounting side and the other partner deal with the audit side. So we can technically do both, but we need, when I say both, when we are doing the accounting, which is going to be more in my realm, we're going to actually require you to have an accountant on staff or a bookkeeper that you've hired, and we're just like managing and reviewing that person. We don't actually want to be like do all the data entry from scratch, because that's going to be blurring the lines of what we call independence, which we have to have whenever we're reviewing or auditing anyone's financial statements. I hope that answered that question with some technicality twist on that. Think we still got a few minutes here that we can still have some questions. Anyone have any other questions?
Tosin, is there and maybe you covered this already, but is there a revenue benchmark that TWC requires to whether you actually are doing an audit, or there's some other version of compliance that you're required for?
Yes, there is. So generally, it's going to be that if that $100,000 benchmark. Below it, you can do what I call a self-certification type of process with TWC. Above it is going to require that audit. Since we have a little bit of time left, I actually do want to open up the Q&A for anything that anyone might have, right? It might not be TWC compliance. It might be kind of operational questions. It might be, hey, my accounting is whatever, right? Let's open it up. We can talk about most questions. And generally, if you have a question, somebody else in the room also possibly has that same issue that they're dealing with. So let's have that conversation. Well, it looks like we don't have too many other questions. All right. Ashley?
We
I'll
are so
hand it back
happy
to
you all
you.
could join us. Thank you so much, Tosin. We are so grateful you all spent some time with us this morning. Hope you got some questions answered. You will receive an email very shortly from the firm inviting you to schedule a complimentary 30-minute audit readiness session. We would love to meet with all of you. So please do take advantage of that. And then when the recording of this webinar is available later, I will also be sending that out to you. So please feel free to rewatch or share that.
Ashley, there's also a readiness checklist that we have. Is that correct?
Thank you, David. Everyone will receive our 2-page audit readiness checklist to help you gauge where you are. And we have a color-coded system at the end to help you determine if you're in green, yellow, or red. So it should be pretty useful for everyone. So I'll send that as well in the email that within an hour. If nobody has anything else, I think we can. Well, let's see. What was that in the chat? Oh, wonderful. Thank you all so much for attending.
Thank you all. Have a great rest of
Thanks,
your day.
everybody. Have a
Take care,
great day.
everyone. Bye.
Thank you.
We can now end the event properly.
Okay.